In this video, I'll be going over all of the different definitions of all of the moving parts that are included within the joule. We'll start off from most important and go towards least important. And so that brings us to our first component, which is, of course, this fast moving oscillator right here, which we'll refer to as the joule fast. In fact, if you go into the settings, that is what will be referred to on the settings here as the fast, show fast. So if I take that off, you can see that it'll disappear in the background. If I put it back on, then it'll pop back up. So this is the fast moving oscillator. It can turn 3 different colors, and it's going to be the most responsive thing. And it's going to give you a couple or a few different pieces of information. It gives you one, information about current momentum and direction of that momentum, and then 2, it gives you information about the current volatility regime or lack thereof as to what's going on in the background. So as you can see, these 3 colors will shift as price action floats around. And what you need to know about this is that the light blue color, or this cyan color is how I like to refer to it as, the one that my cursor is currently tracing right now, that is an indication that current momentum is to the upside and volatility is likely expanding to some level. In other words, volatility is not contracting, it is actually expanding during this phase. Now, when that happens, we typically do expect upside moves, but of course, just analyzing one piece of the whole is not going to be a complete analysis. So the next color that it can change is this white color right here. And that is an indication of no directional bias nor volatility expanding. In fact, this would be volatility contraction in relation to the current direction. So when things are white, it's kind of like a decision phase. And as you can see, it turns white typically when the slope will go from up to down or down to up. If you are looking for a more in-depth explanation of why it turns white, it has to do with actually the BBWP indicator and where things are positioned there. However, basically when it's white, that's kind of a period of no major bias or a changing of directions. And of course, when it turns this dark blue color, that is going to be when the current momentum is positioned to the downside and volatility is expanding while price moves to that downside direction. So that is the fast. Moving on to the slow, which is this purple oscillator that my cursor is currently tracing. And let me just make sure that we're on the same page here, but it is the slow here. Boom, it'll disappear, and there we go, it's back. Okay, the slow is essentially just a slower version of the fast. It's giving you a multi-time frame function here in essence, and what that allows you to do is it allows you to match up multiple different time frames on their current trajectory. So ideally, we want to see the slow, and as we'll get to after this, the high here kind of be working in the same direction as the fast. When all 3 of these things align, that is when we are very likely in the midst of a pretty decent move, a pretty momentous and maybe even volatile move as well. Of course, the yellow, as it is referred to on the settings here, is going to be referred to as the high. And I'll just remove it for a second and put it back on again, just to confirm that we know what we're talking about. The high here is the slowest moving oscillator of these 3. So we expect that one to be sort of like the axe at the end of the day. When the fast is above the slow and the slow is above the high, that is when we have kind of the stars aligning for an upside movement, and vice versa for downside. Let me just find a quick example for that. We have one right here where the high is above the slow and the slow is above the fast. This would be a downside setup, of course. Now, moving on from there, let's actually just go down the list. The auto fib is going to be this sort of squiggly line in the background here. That is what it's referred to on the indicator itself. It's the one that turns green and red. Again, my cursor is currently tracing it right now, and actually I'll take it on and take it off one more time just to make sure we're 100% on the same page here. Now this is technically a DMI cross. So when it is red, that means that the DMI minus is actually taking precedence over the DMI plus, which is just another directional and momentum based indicator, actually, as the name would imply, directional momentum indicator. Actually, it's literally the name of it. Now, when it is green, that means that the DMI plus is above the DMI minus. Just another sort of added confluence here for when we see our other oscillators, the fast, slow, and high, moving in that same direction. So if we're kind of putting this together piece by piece, if we are looking for an upside move, we would be looking for something like this, where the fast is above the slow and the slow is above the high, and the DMI, and the autofib here as it's labeled, but it's actually DMI, is green. If those are all true simultaneously, okay, we have a lot of things moving in the same direction. Now, I should also say that the positioning of the DMI is not super important. Obviously, when it's super, super low here, it's going to be difficult to keep up that momentum to the downside, and vice versa. When it's high for a while, it's going to be difficult to keep that momentum up for a long time as well. But I find in my experience that just looking at the positioning of it is actually not super, super important. Other people might argue differently. By all means, find a strategy around that, go for it. But I've found that things can kind of stay down here for quite some time, and they can also stay up for quite some time as well. So I wouldn't give too much credence to the position of it. The main focus here is the color change. What color is it? That's what we want to know. All right, moving on now. The show EMA cross, that's going to refer to this. Whoops, it just disappeared, obviously. It's going to refer to this top end line right here. And it's just showing you the cross between whatever moving averages you have selected for this pane right here. So in this case, we have the short moving average at the 21 EMA and the long at the 55 EMA. So basically, when the short crosses the downside of the long, it'll turn red, as you can see right here. And vice versa, for when it crosses the upside, it'll turn green. So you can change this to whatever EMA cross you want, or you can also just take it completely off if you're not interested in looking at that. It's just a general, the idea here was give a general bias of the current trend, as we typically like to include trend, momentum, and volatility altogether. This is something that some people find a lot of use with, some people do not. But basically, just another added confluence. The general idea here would be that, hey, when the trend is a certain way, in this case, it's red, so it would be to the downside, we should be looking for downside signals here. Those are going to be the more likely ones to play out. That would be sort of the interpretation of that. And of course, when it's green, we want to be looking for other bullish signals. We want to kind of prioritize those over any sort of downside signals. So it's kind of like a filtering mechanism, if you want to use it as such. And in general, that will be a really easy way to increase the hit rate of whatever purpose you are setting the jewel towards, just by generally trading with the trend and only listening to signals that come in confluence with the current trend. Anyways, moving on from there. You can also use an MA cross instead of EMA. I never do this, but of course, if you want to use simple moving averages, go for it. All good. Show BG alerts. So what show BG alerts refers to are these sort of, what do we want to say this, like a filled in color here, this sort of, this sort of area that's filled in red or green. It goes red or green. That is what that refers to. So I'll just tick it off here so you can see. Boom, they all disappear. If I put it back on, they reappear. Now, what this is it is an indication that actually a completely different indicator has fired off called the God mode indicator. Now, this is an indicator you can find for free on TradingView. It's a pretty decent indicator on its own. I don't think it's complete on its own, but it's a really good sort of notifier that you should be on the trigger for looking for a sort of move in that direction. So obviously when it's green, you're generally going to be thinking buy. When it's red, generally thinking sell. I will say, however, that in and of itself is not going to be a great signal just on its own. As you can see right here, when it turns green in the background, it's a phenomenal notification that, hey, there is going to be a pretty important long entry here very, very soon. But entering immediately when it turns green, as you can see, I mean, this would be a terrible do, really. You would have entered right here before a pretty nasty drop down. Of course, nothing's going to be perfect, but I do want to highlight that this is not like an immediate call to action. It is a sort of it's a sort of preliminary alert, especially for some of the bigger moves. You will notice that you'll get this sort of background alert here. So do be aware of that. It typically does accompany, the most important major highs or major lows, especially on higher time frames as well. All right, let's go back into it. And yes, we've gone through the fast, we've gone through the slow, we've gone through the high. Smoothing factor here, I like to keep it at 1. Some people like to do it at 2 as well. It'll just smoothen out the oscillators. I find that if you go, certainly above 2, they become a little bit too slow, all of them. So it's better to, keep it at 1, maybe 2. But personally speaking, I think 1 is best. It's going to be most responsive. The people who like 2, they would argue that 2 is better because it smoothens out some of the false signals. It gets rid of some of those, which is actually a very valid preference to be having. Okay. From there, we want to keep both of these ticked. We don't want to mess around with these. And time frame multiplier, again, keep that just at 1. We don't need to mess around with that, as well as DMI factor. In fact, all of this, I just kind of keep at default, unless if I want to play around with the EMAs here. But that's again a preference call. Anyways, moving from there, I do want to now talk about, let's go get some free space here. I want to talk about the different zones that you see on this indicator. So I'm going to highlight this first one right here. This is the zone between 100 and 80. So that would be the critical bull zone. This is an area where you're going to find major tops in, typically speaking. When you see, or if you see, the fast oscillator, or actually very much if you see the fast, slow, and high oscillators nearing this area right here, you're probably very, very close to a major high. Because think about what that means. It means that the current time frame plus the other multifunction time frames are all very, 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 very kind of overdone at the moment. So let me find an example where that might make sense. And we actually don't have to go too far back. It would be this one right here. We can see that all 3 of these oscillators plus the background signal are all firing off at the same time. And what do you know? Let's just pull out a little bit here. This was a pretty important high, you might say. And of course, there was actually another signal similar to that relatively soon after that. So do be aware that when you see all 3 of the oscillators get into this region, probably coming close to, at the very least, consolidation and a local high, maybe even a major reversal. Same thing for the zone down here between 20 and 0, but that would apply, of course, to the bearish side. So many a time you will find major lows when all 3 of those oscillators reach down to that region. It doesn't happen too often, just like the upside doesn't actually happen that often as well. But when it does happen, it's usually a really good sign. I'm going to try to find an example here of a good local low. And again, we actually had to go back pretty far in time just to find an example here that's somewhat comparable. This would be the best one, actually. You see all 3 of these down in this region. And what do you know? This was actually a major low. Yeah, Bitcoin's last try below $20,000 before being catapulted to the upside, significantly, in the following year, basically. Okay, now that leaves into question, what is all this stuff in between here? Well, this area this is what we'd like to refer to as sort of the normal bullish control zone, meaning that when the oscillators are within this region, you know, it can be a very momentous move. It might be even nearing its end, but this is where we expect trend to continue to take on over, and for, you know, higher lows within the context of an overall uptrend to likely come in if things are trending now, meaning that momentum is carrying things upwards now. By contrast, the equal but opposite zone to the downside would be right here between 40 and 20, and the zone in between is the neutral zone. And you'll also notice that these are actually not specifically, let me actually just mark this off really quickly here. These two levels right here, this right here and this right here, are not exactly at 60 and 40. They're actually at major fib numbers here. This one is at the 61.8 level, or 61.8. And this one over here is at the 382. So the idea here is that a lot of the time you will see the fast moving oscillator turn around at one of these areas. And if you see it turn around at one of these areas, that can be a good early indication of a nice rejection coming. So just be aware of where that is as those fibs do come into play. Okay, I think we have actually spoken about everything on this indicator now. Of course, you can format it as much as you like. You can take off the God mode alerts in the background. You can take off even the fast. You can take off the slow. You can take off the high. Personally, I actually keep just the slow and the fast on. I just find that having too many things kind of gets a little bit too busy on the chart. I definitely like having the DMI, or sorry, where is it? Where is it right here? Oh, you actually can't take it off, can you? No, it's called the fib on this one. Yeah, I certainly like having this one as well. I do find that actually is quite helpful. The EMA cross I personally don't typically have on because I usually have exponential moving averages on my chart. And of course, if you did want to move those fib numbers in the background, you could adjust it right here as well in the style section. But other than that, it looks like we have hit everything on this. This is typically how I have it set up myself right here. And I find that keeps things a little bit easier to watch. But again, if you are newer to it, or if you are just unsure, I would say take it at default. And you'll notice what's most important to your specific preferences as time goes on. But that'll do it for this video on definitions, and I will see you in the next one as far as how we can incorporate it into a working strategy. And I'll see you there.